The Chinese property developer Evergrande has missed a payment for its offshore bondholders, and that means it's now entering a 30-day grace period, after which it'll be declared in default. So what will happen now that it's missed that deadline? What will the Chinese government do about it? And is there a risk of contagion for those of us who invest outside China? Let's look at that in a bit more detail. Let's take a quick look at Evergrande's business. The background here shows you one of Evergrande's property developments, and it's actually got projects in more than 200 cities in China, which cover all 31 provinces. It's the third largest developer in China by revenue, and it's branched out into many other sectors beyond property development, which is usually a warning sign. So the deadline that we've just passed was for offshore bondholders of Evergrande. So this is when Evergrande issues debt in US dollars, and these are usually bought by foreign investors. Now, a bond usually pays coupons to its investors on a regular schedule, and on September the 23rd, there should have been an $84 million payment to bondholders, but that was missed. Now, Evergrande has said nothing about skipping this payment, it's just that bondholders have noticed that they've not been paid. And there's another payment which is due on September the 29th of about $50 million. Now, strictly speaking, this is not a default, not until this 30-day grace period ends after they've skipped this payment. So towards the end of October, we'll know whether a default has occurred. But even if it does manage to service that debt, unless the revenue of the company really picks up, they'll still have trouble servicing other debt payments. And these bars beneath me in black show you the dollar bond payments which are due every year until about 2025. And the pink bars show you the interest due on local bonds, which are issued in local currency. And immediately you can see that a lot of their financing has come from those dollar bonds. This is the share price on the Hong Kong Stock Exchange for China Evergrande Group, and since summer 2020, the share price has fallen by 90%. Over the last 24 hours, the share price has rallied by 18%, so clearly some people believe that it's going to make it. Remember that if you're a shareholder, you do stand to lose 100% of your investment if the company becomes bankrupt, whereas bondholders are higher in the capital structure. That means in the event of liquidation, they get paid first before the shareholders. So they may recover 20-30% of their capital. So clearly there are some very brave investors out there who really believe in Evergrande. Now you may be thinking, I don't invest in Chinese property, I shouldn't care about what happens to this company. Well, let me tell you why that might be wrong. This is from a paper by Rogoff and Yang called Peak China Housing, which was published in 2021. And what this shows you is real estate related activities as a percentage of GDP. And what you can see is that China by far has the largest share of GDP from real estate related activities. In fact, this makes up almost 30% of their gross domestic product. There is one country which does look comparable in 2006, and that's Spain. And that's a clear example of misallocation of capital, because in 2006, Spain was spending far too much on real estate development. Many of those properties were never lived in and had to be demolished. So what's pretty clear is that the Chinese economy is out of balance. There's too much concentration in these real estate related activities. Now, local government in China has been very keen to promote this real estate development. And according to Rogoff and Yang, land transfer fees make up over 35% of the revenue of local governments. And the reason why the Chinese property market is probably the most important one on the planet is because of its size. So according to this estimate, in 2017, the size of the Chinese property market was almost $70 trillion. To put that into context, it's more than twice the value of all US housing. And at that point in time, it was considerably bigger than the entire US stock market or bond market. So if this market goes into reverse, it could clearly have a destabilizing effect not just on China's economy, but it's very likely that would spill out into other markets globally. If you do want to learn more about investing, a great way to do that is by signing up for my free weekly market roundup. Here's the Evergrande story from a previous email, and to learn more about that, just click on the link beside me or in the description below me. Now, many of the problems that we're seeing right now are to do with how this property market is funded, and that's via China's shadow banking system. Now, shadow banks are companies which carry out the functions of a bank without being a bank. And in China, a lot of the capital for real estate development comes from retail investors like you and I. And this flow diagram shows you how this shadow banking system works to generate these things called wealth management products. Now, these offer a very high yield to Chinese investors, so they are an attractive investment. The first step in creating this kind of debt is when a property company approaches a bank for a loan. Instead of borrowing directly from the bank actually arranges for a trust company to make the loan to the property developer. Now, that's good from the point of view of the bank because it means the risk isn't on its own balance sheet. The trust company then shifts this loan into a separate entity called a special purpose vehicle. Now, these were used a lot just before the global financial crisis to create something called collateralized debt obligations. So you can see the risk is actually sliced up. So you can see the senior tranche, which is French for slice, is just above me, and the junior tranche is just below me. Then a ratings agency assesses the credit risk for the senior tranche and the junior tranche and gives them credit ratings. Usually the senior tranche is considered to be high credit quality and the junior tranche is low credit quality. The bank will purchase the high credit quality paper in the senior tranche, and you've probably guessed it, the retail investors will buy the junior tranche. And that's because the compensation for a greater loss given default is that you get a bigger interest payment. So the coupon on the junior tranche is often around 10%. So in theory, everyone is happy. The property developer got its capital, so it can carry on developing property. The bank got rid of the risk off its balance sheet, and it probably made a fee in creating this paper. And the retail investors like you and I get a really nice, juicy income. The problems really start when property prices start to fall. That's because the companies run into revenue problems, then defaults start on the loans, and the junior tranches of these structures start to take a loss. Also, the retail investors are less likely to buy these wealth management products if they see there are problems in the property market. Now, of course, the Chinese government is aware of these problems and it's trying to slow down this rapid credit growth, which is a result of this debt creation engine. So what has the Chinese government been doing about this? Well, it has been trying to de-lever this system by reducing the amount of debt which these property developers have. And it has this system in place which is a little bit like a traffic light system. What they've done is to create 3 measures of leverage for these property development companies, and each of those is like one red line. So this is the 3 red line system. If a company hasn't breached any of the red lines, which is usually because it doesn't have a lot of leverage, then it's classified as green. And that company can grow its debt at an annual rate of 15%. If it breaches one of those red lines, then it can only grow its debt at 10%. And Evergrande had already been named and shamed as having broken all 3 red lines. And if we look at the amount of borrowings which Evergrande has, you can see that they were gradually increasing from 2014 onwards. But this red line system did seem to be having a positive effect, in the sense that the borrowings were falling by Q2 2021. So what are the Chinese government's priorities in dealing with this debt problem? Well, you can bet that the priority number 1 is to maintain political control. And to do that, it has to favour its own citizens. So those 1 to 2 million people expecting a property from Evergrande at the moment will have to be satisfied, either by receiving a finished property or by having some kind of financial recompense. Now, the real estate sector is a massive employer in China, so the next most important priority are probably the 160,000 workers affected by Evergrande's financial troubles, but also the contractors who've already done work for Evergrande but who haven't yet been paid. Then we come on to the capital markets and the way that Evergrande's raised capital via the bond market. And it's pretty clear that China's favoured the onshore bondholders. These are Chinese investors primarily who've invested in local currency in bonds issued by Evergrande. Now, these people in a debt restructuring will probably have to take a haircut. So, for example, if they've lent 100 yuan to Evergrande, they may only receive 70 of those yuan after the haircut is applied. Another way of restructuring the debt is to extend it over time so that the money will be repaid, but it could take much longer. But what's certain is that the onshore bondholders are favoured relative to the offshore bondholders. So those are usually foreign investors, and you'll notice it's those investors who have not been paid. Now, the reason why people in the West are drawing an analogy with Lehman is that many of the factors are quite similar. For example, we saw those SPVs, and we saw the junior tranches and the senior tranches, and it's to do with the property market and too much leverage. However, there's a big difference between China and what happened in the US. Now, normally what happens during a credit crisis is that there's some kind of shock and there's a higher risk of default. And clearly that is now the case in the Chinese property market. Then what happens is the debt of those companies which are running into trouble fall in value. And again, this has also happened with Evergrande. Many of its bonds are now trading at distressed values of around 30% of their face value. But this is where the two countries diverge, and this is critically important. One of the problems was that in the US, banks were undercapitalized, and once they started to see problems in the credit market, they tightened up their credit standards. If you're worried that people are going to default on your loans, you'll be much more selective in choosing people to whom you give those loans. So with tighter lending standards, credit is harder to get, and usually you get a slowdown in growth. And the difference between China and the US is that it will force its banks to lend in such a crisis. That's because it can't afford to have a low level of growth. So you can bet that the Chinese government will use this power, and this is a power which the US government didn't have. And this is one of the rare benefits of an authoritarian system, which is that it can manage these crises very well. But as Western investors, what we really care about is whether this crisis will spill over into the value of our portfolios via Contagion. Now, this could happen directly. It could be that you own a fund which has direct exposure to Evergrande, either via the equity market or the bond market. But what's much more likely is that the contagion will be indirect. So, for example, you might invest in the same sector, the property sector, or you might invest in the same country, which is China. Now, we have seen contagion within the sector, so other companies in the property sector in China have seen a very large fall in their share price, but the broader domestic Chinese equity market has not seen a very sharp fall. And also in the bond space, while it is true that property developer bonds have sold off quite a lot, it's not true that that's spread to every sector of the Chinese high-yield bond market. Another conduit for contagion would be if this causes a slowdown in Chinese growth, given the size of the Chinese property sector. If that does happen, then China's growth is very commodity intensive, so it could have a knock-on effect to other countries via commodity prices. The other less tangible route is via fear, and this is why we saw markets sell off in the US and elsewhere. It's not because of any direct link to China, it's because people were simply worried about buying risky assets. So for example, if we look at the equity market, so here the darker line is the S&P tracker, SPY, which you can see is up 40% since the beginning of 2020. And the lighter line here is a tracker for Chinese equity, which is also up relative to where it was at the beginning of 2020, but not as much as the US. Now, markets did wobble in the US and elsewhere for a couple of days, but they quickly snapped back up. So certainly at the moment, there's very little evidence that we've seen widespread contagion in Chinese markets or markets elsewhere. But the danger is that this deleveraging process is going to be one that takes a long time, because as we saw, there's a huge amount of debt outstanding and property prices are hugely elevated in China. That usually comes with its own accidents. So we may well see a repeat of what we just saw with Evergrande. And it's not just equity that would be affected, it's all the other assets which have increased massively in value. So who cares whether Evergrande defaults? Well, certainly the people who've paid for apartments which they've not yet received care, of which there are about 2 million people. Then there are all the workers who haven't been paid, they care. And of course the wealth management product investors who could lose a significant proportion of their investments. But it has to be said that global equity markets don't really care anymore. But of course this deleveraging process will take a long time, and usually that comes with accidents along the way. So hopefully China will manage that well, but if they don't, we'll probably see a replay of what we just saw. And as always, thank you for listening.